All right, for more on the Fed in Jackson Hole, let's bring in former Fed Governor Randall Krosner. He's currently a University of Chicago professor of economics. Randy, great to have you with us. What do you think Jerome Powell's job number one is at Jackson Hole next week?
Well, it's interesting because remember last year he ripped up the script and he gave a much shorter speech and said the same thing 8 times. Inflation is our priority. And so in some sense, he's not going to take a victory lap, but they've made a lot of progress. Inflation has come down a lot. They've raised interest rates quite a bit. And I think he's going to talk about how inflation is starting to come down, but that the Fed needs to continue to remain vigilant, exactly as you guys were just describing. They don't want to give any signal that they're going to be cutting anytime soon, and they're not going to be cutting anytime soon.
Randy, it's Tim. Thanks for joining us. How is the Fed viewing the rest of the world right now? And some of the issues we're starting to see may make their job easier, may make their job more difficult. There's a bit of a flight to quality going on to the dollar. There's certainly a dynamic with the Chinese economy and even other central banks that are making the Fed, even on a relative basis, look more hawkish than they might. Is that good or bad?
They're going to take that into account, and certainly we're getting a lot of negative news out of China. So China is slipping into deflation. They're cutting rates. Other central banks are either holding or raising rates. And so very, very different in different parts of the world. I think they would like to see a little bit less excitement and activity globally. Not that they want to see recession, but as the minutes made really clear, and their statements have made really clear, if the economy continues to be kind of steaming forward with near record low unemployment levels, increasing GDP growth, it's really hard to see how that's going to be consistent with inflation continuing to come down and staying sustainably close to their 2% goal. So I think a little bit of slowness in the rest of the world will be welcome, but certainly they don't want a global recession.
Randy, when you look at it, you just touched on it. Does the Fed have to wait until the jobs market cracks? That's number one. And what do you think about long and variable lags? Because there's a lot of stuff that could still be coming down the pike, so to speak.
For sure. So I'm at University of Chicago, and Milton Friedman, a great University of Chicago economist, had 50 years ago talked about long and variable lags of monetary policy. And boy, are we still seeing that today, because the Fed's been at it for a year and a half, and the labor market is still near record low unemployment rate. So I think exactly as you said, they're going to wait to see some of the heat coming out of the labor market. Now, some people won't be satisfied until they actually see the unemployment rate start to move up. Others will say, well, as long as the growth rate of wages comes down a little bit. So I think that's kind of where some people around the table will disagree. But I really don't see how they can feel comfortable to say, okay, we're not going to be raising anymore if the labor market is as strong as it is now.
Randy, I'm just curious, we got earnings this morning from Target. We're getting earnings tomorrow from Walmart. And so many people are expecting the consumer to endure more stress as the year goes on because they're taking on more debt. They're paying higher rates. They've got student loans that they have to start repaying in October. What's your take? Do you think the Fed, preemptively takes that into consideration when thinking about these hikes? Or do they wait to see that impact on the consumer?
I think they're still waiting to see the impact because, the consumer has been quite resilient. Consumer confidence has been strong. We really see it's really quite impressive how, whether it's COVID or whether all these or interest rates moving up to levels they haven't been in many, many years, consumers have been pretty resilient. And that's great, but it also makes the Fed's job a little bit harder. So I think they're going to want to see a little bit less strength there, a little bit more moderation before they're going to be able to feel comfortable to say, okay, no more hikes. But as I said, they ain't going to be talking about cuts for a very long time.